If you want to learn how to trade just like me, join the community, click the private Discord link, sign up through this membership level, and you will gain access to weekly group mentorship calls for free. Welcome back everyone to another Quant update. As you can see, we have fallen back to the key level of support, just essentially confirming it one more time. It's just another attempt at trying to break it to see if the bulls are there to protect it. And so that's why over the past week we were suggesting that 103 cannot be lost, but marking out this $5 range between 103 and 108 as the key level going forward. Now that it's broken, it must continue to hold a support if we want to continue with the reversal wave to hit this $125 technical target of ours that we have been waiting for the past week. Now we can very quickly invalidate this. You just need to fall back underneath this golden pocket, and we've essentially stopped the reversal wave, invalidating it. So it means in the short term, don't expect these, expect lower. And I would actually say that the 200 EMA usually is the key point, because we know that that acts as the lowest point of support of this uptrend. However, as you've seen to the left over here, when we are consolidating, it does tend to go underneath, above, underneath. In trending markets, the EMAs are best used when we're actually going up or down. But when we're consolidating like this, we'll have these moments where we can dip underneath, reclaim, dip underneath, reclaim, and so on and so forth, as I just explained. So that's why, for this reason, I'm not too focused on the 200 EMA right now. However, we just know it as the bottom of our uptrend while price action is above it. So we very quickly went underneath and reclaimed it. I like that, because we were essentially losing it to hit the 0.5 Fibonacci, the lowest point of the reversal wave. And as long as that holds, we're looking to continue upwards. So reverse from this point to continue upwards. And then we've also reclaimed the 200 EMA as well. So that now this should act as our bottom. So the next step, now that we formed this bearish cross, we need to go ahead and invalidate it. The cross took us to below the 200 EMA, but as the 0.5 is the lowest point of the reversal wave, it's trying to keep it valid. It's trying to keep that $125 technical target valid. So we need to very swiftly reclaim the 200 EMA, as we've now seen, but also taking out the bearish cross. So wouldn't be surprised if we get rejected. We must hold the 200 EMA going forward. So something like this needs to happen for the continuation higher. Now I'm going to scale all the way back to the 5-day time frame to show you some very nice things. So we can see it's a little bit clearer on the 5-day time frame what is going on. We essentially topped out over here at the 5-day 200 EMA, falling back to the golden pocket, which is also the 20 and the 55. And as long as they hold a support, we will eventually break higher, meeting the 125 target, but actually going beyond that eventually. We're going to run through today the level of resistances that are up ahead. So make sure, if you haven't already, to like, subscribe, comment and share. We're under 200 subs away from 7.5k, and I really think we can get that in the last couple of weeks of this month, of this year, sorry. So yeah, let's dive into this 5-day analysis right now. We've already spoken about why we are targeting 125, 130. It's a golden pocket. If we go from this high over here to this bottom, we can see it's the golden pocket with the 0.5 at 117, slightly beneath the 200, but the 200 EMA is where we got rejected, which is within the golden pocket. So we came up into it, we're essentially getting rejected. We need to find key levels of support, which is where we are right now, and I marked that out all for you guys last week when we were on the lower time frames. But as we've now gone to a more accurate time frame, the higher the more accurate, we can see that we also have moving averages in that same location. So it's just acting as further confluence. So essentially running into the 200 EMA, falling back to the 20 and the 55, or in other words, running into the golden pocket and falling back to an opposite golden pocket down here. And we're trying to keep this reversal wave to meet these targets. So we need to bounce pretty much from this 103 location, as we're already starting to see. This, of course, can all go wrong. But as long as we are holding above these moving averages and that reversal wave intact while above 103, we're looking for continuation into this golden pocket, which needs to be broken. Remember, guys, because if I now go to a fresh chart very quickly, show you what a downtrend looks like, it's not a straight move down. It's down, retracement, down, retracement, down, and so on and so forth, essentially. So on those downward pushes, when they are completed, we need to find where it's pulling back to. And then at the golden pocket, it will continue lower. Now, to get into a bull market, we need to stop this lower low nonsense. And the only way is by using a fib on this wave up, giving us a golden pocket over here. And then we're in a scenario where we've got two golden pockets. With the lower one being lost, we're going to go on that original path. But if we form a higher low over here and break that first golden pocket, we're then creating the reversal wave, and that's how you actually enter a bull market. Essentially, you need to see that being that happening. So if we want this to flip bullish, then we need to see an eventual break of this area, flipping it into support for the continuation higher, pretty much retracing back to this high over here. And now this is where some new fibs will come into place. Previously, we had this level of resistance, had this huge dump, and retraced all the way back up to it. We're finding these patterns right now, and if we break through the golden pocket, we retrace back up to this high for the third time. So that's a real point of interest for me, because we've got this is how we got down in the first place. We got up there, we used as a technical target and an area to get out of Quant. After we bought at 50, we got out at 200, and then we can see what happened next. This is where I was DCAing again, and then we're looking for the journey back up into there, forming this huge weekly double bottom. But why do I need to place a new key fib level there? It's because this is a high that has already been retraced to, and pretty much the last one until the top. So what I'm going to do is place a fib from that high, the level of resistance we've already retraced to, and then use my fibs to the lowest point of our bear market, $40. And then we're getting further confluence with this $125 aerial, $125 to $130. We've got two golden pockets there now. So that's why it's important to break through that level, because break the golden pocket, we go to the one fib level. But while we break through the golden pocket, we're validating these targets to the upside. So we can see already that we are going back up to the previous all-time high, and we've got some further confluence showing that, but we are still underneath that level of resistance. But we are still underneath that level of resistance over here. So it's really important to break through $125, $130, creating the reversal wave, allowing all these targets to the upside eventually to get met. Now, these are not final bull market targets. These are just, again, placing fibs from this high that we've already retraced to. If you want bull market targets, you need to go from the bull market top to bear market bottom. But we're just literally using a fib level that we've already retraced to, and then we've pretty much found the golden pockets that we need to reclaim right now, which is pretty much $130, $125, $130, and then that's allowing us free reign to retrace back up to here and then back to our all-time high, essentially, as long as those key levels are being maintained, which is the golden pocket. So that's it from me today. Make sure you like, subscribe, comment, and share. And if you want to get educated so you can learn to do this all on your own, you actually have a chance for me to walk you through all of this if you join the Discord community. So we do weekly group calls in there, mentorship, where I teach you the strategy. So if you want to be part of that you can also get free access to that through my education, whether it's the course or the one-to-one mentorship plan, free for 2 months. So there's multiple options. Just reach out to me on Twitter, Louis_crypto, but I'd suggest using the links down below. I've got a whole bunch of educational content, and over here on the website, you can see loads of other people taking action recently. If you want to get educated, simply scroll underneath the video, click take action or Linktree, and click the option that you want to read more about, or private message me on Twitter. Let's start off with the ebook. This is where you can take action on my ebook, teaches the exact strategy. Head over to the membership level if you want to become a Discord channel member, where you have access to 2 weekly group mentorship calls, or if you want to take action on my 6-hour long pre-recorded course, there's an offer here, and you do get Discord chat for 2 months totally free. Here is my beginner one-to-one mentorship plan, which includes 3 hours of my one-to-one help, the course, and 2 months free in the chat. And there are some other plans here for 5 or 10 hours of my one-to-one help. Use the links down below to private message me on Twitter, or head straight to the website using one of these links to take action. Cheers.